Hey everyone, welcome back to Upside Down Data. Today I want to talk about the current Ethereum crash, what some of our indicators are making of it, and some things to consider when we consider the long-term prospects for Ethereum. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter, where we put out regular updates about our risk indicators and more. So what I'm showing you here is our risk indicator for ETH USD, the long-term version that cares about moves that play out over months. And I want to start off with this indicator because what we're seeing right now in Ethereum is a bit of a bloodbath, honestly. Ethereum had been holding above its summer lows, summer 21 lows, for a while, but then it broke below that and has been kind of more or less crashing ever since. So I want to get a sense, I want to talk first about our risk indicator to talk about what it is currently looking at with Ethereum, where it currently evaluates risk to be. So first off, this is just the price history of Ethereum color-coded to the output of our risk indicator. So 5 is high risk, -5 low risk. And you see that it does a good job of identifying these high risk points, these topping out points. The upside potential has been exhausted, as well as these low risk points where the downside potential has been exhausted. And what you'll see is that we're dipping back down into the deep green zone, which we've only ever seen really a couple times before. I'm going to show the raw output of the model with the Ethereum price overlaid on top to get a more close look at this. So UDPI level is now on the y-axis, and the white line is the UDPI level. And really where we are right now, as we can see during this brutal bear market that we've been in since November of 21, we've re-entered this zone that Ethereum has actually only been to twice in its entire history. Well, technically 3 times, but basically twice in its history. The bottom of the bear market in 2018, and then once again right before, and then right after or during the March 2020 crash. You see, you dipped barely in here, but really it was the March 2020 crash that brought us back down into it. And really and essentially what the risk model is saying here is that from its perspective, we've seen about as bloody of an event, about as bloody of an occurrence as the bottom of the bear market in 2018 and the COVID crash, the March 2020 crash, where we are right now. And the reason why it's seeing that, so one of the things that the UDPI does is it accounts for diminishing volatility. This idea that as an asset gets older, as it becomes more mature, it gets a larger market cap, moves to the upside become more limited in what's realistic, and moves to the downside also become more limited in what is realistic. So even though in percentage terms, this crash is much greater than this current one that we're experiencing right now, the idea is that when you take into account diminished volatility, this is getting down to historically bloody. Basically, it's saying that from a historical perspective, based on everything it's seen on Ethereum in the past, it would expect around this point to be a point where the downside potential is starting to get exhausted, and there's considerably more upside potential that remains. So does that mean we should crack out the champagne and just be backing up the trucks to load up on ETH? Well, not necessarily, right? One of the things that's different about this current bear market relative to this one here, that the macro environment is quite different. So even though there was a Fed rate hike cycle going on during this rough time period back here, there wasn't the inflation that there is right now. There wasn't, wars going on that are really disrupting commodity supplies. It was a different environment. The Fed wasn't as, basically forced to continue their hawkishness. And right now, with the CPI coming out last week being higher than expected and showing that peak inflation was not back in March, that has really spooked risk markets. The stock market really did not respond well to that bit of news, and crypto has been following along here since. And then, things could get even worse depending on what the Fed decides to do if they decide to actually hike rates even more quickly than they had been telegraphing earlier based on that inflation print. So this is a very scary time for risk assets, basically, is what I'm saying from a macro perspective. And so even though we do have, a bear market, a full-on bear market to look back to with Ethereum, and the model can train itself not just on these bull market data, but also this bear market data, the fact is that, Ethereum's never seen a macro environment like we're in right now. And so even if we are in this historically oversold point from the model's perspective, that's no guarantee that we couldn't go down further. If we were to see a full-on 2008 style crash in the stock market, for example, then, all of this to some degree goes out the window. We have no idea what crypto will look like in that type of environment. It's never seen that environment before. Bitcoin hasn't, and then certainly the rest of the crypto market hasn't either. And so that would be a case where historical trends would not be as diagnostic. We just have nothing to base it on. But that being said, if we are able to find a bottom in risk assets to some degree soon, obviously it's the case that a hawkish Fed is not completely not priced into the model. It's not a black swan event. People have known about this for a while. Just that, exactly when inflation will peak is a little bit undecided. Who knows exactly how much further risk assets will crash. And that might present a bottom for crypto market as well. But we'll just have to wait and see, obviously. But if that were to happen, if we were to find a bottom in a more macro sense, across, the stock market, etc., then this could be very well as much of a value zone as the COVID, capitulation and the bottom of the 2018 bear market. And then looking back, years from now, we might look at this as being very much a value zone for ETH. Even if this isn't the absolute bottom, it very well could end up panning out as being a pretty desirable point to be acquiring ETH should that happen. But of course, not financial advice. You should make your own opinion of what these data are saying, and especially in the context of the macro environment. Now, another thing that has me concerned with ETH, we flipped over to a different indicator. This is our momentum bias indicator. The different indicator we have here on the channel, what it's classifying or what it's assessing is the amount of momentum in the market. And I call it the momentum bias indicator because it's really looking to see if momentum is biased to the upside, you tend to see in bull markets, or biased to the downside, you tend to see in bear markets. So 0 is the average amount of momentum Ethereum has had in it, which is positive given its upward trajectory with time. And these are standard deviations in the values here. So 1 standard deviation above the mean, 1 standard deviation below the mean. And so what you can just see is looking back at Ethereum's past, is that in these big bull markets, these big parabolic explosive moves to the upside, it ends up putting in this high amount of positive momentum bias that kind of pulls price up along with it. And then you kind of hold that through the uptrend. So for example, here you kind of hold it, and then you maybe kind of oscillate through these kind of consolidation periods. And then again, the second bull run, spend a lot more time up here in the green. And then during bear markets, you spend a lot more time in the red than you do in the green. And one of the telltale signs of a bear market across assets, Bitcoin shows this, other assets that we've looked with the MBI, is that in bear markets, you'll get these long stretches down below 0, and maybe these occasional times where you try to poke your head above 0 in these kind of bear market relief rallies, but then that quickly gets rejected back to the downside. You spend a long time down in the red. And we're seeing that exact signature here again playing out basically to a T, falling off from the all-time high or close to it here back in November. And we've just been setting in a regime of negative momentum bias ever since, with just this one attempt to kind of peek your head back above in this kind of mini relief rally we had here back in March before the 4 fell out and the UST debacle happened, and everything's been down ever since. Now we are, trying to chart a course back towards the upside, but we're really in pretty deep negative momentum bias here. And so with Ethereum crashing right now, there's nothing from this model's perspective to say that it's going to necessarily catch itself anytime soon. And we could see more pain before we're able to eventually, hopefully, be able to reestablish this positive momentum bias. Now, with an asset like Ethereum, besides Bitcoin, it's probably the one that we can be most certain is going to survive any kind of bear market that happens. And so, that's kind of my base case, is that no matter how bloody it gets, Ethereum will be here to see another day. The big question is just how bloody it has to get. And basically, from the MBI's perspective, there's nothing to say right now the bear market is necessarily over, is even necessarily close to being over. We're going to have to wait and see. And if we just compare the amount of time, for example, in this bear market, we haven't been in a bear market nearly as long yet as we were back here. Haven't spent nearly as much time in a negative momentum bias regime as we did back there. So we'll have to wait and see what happens. Now, obviously, should the bear market continue, I wouldn't expect it to just be straight down, right? That rarely is the way it works. You tend to get this volatility where you at least get some kind of relief rallies throughout. But there's nothing from this model's perspective to say that really a bullish outlook is warranted quite yet. We're still very much in a negative momentum bias regime. So that's concerning, right? And that's one more reason why I personally do not see the current levels as the point where it's necessarily where you just want to back up the truck and go in. Obviously not financial advice. You should make your own opinions. But this is another piece of data that has me very much cautious on Ethereum right now. Okay, so let's flip over to some other data here. So one thing I wanted to look at was some on-chain data for Ethereum. something I noticed is also a little bit concerning. So I'm showing you here, this is theblockcrypto.com. This is an on-chain data chart that they have here, which is just the number of active addresses on Ethereum. The 7-day moving average is what I'm showing you here. And the reason this caught my eye is that when we look at the usage of Ethereum, kind of the number of people using it, really kind of ever since the beginning of 2020, been kind of on an uptrend, right? Kind of moving up, or at least kind of holding steady then after the big peak back during the capitulation back in May of 21, when everyone was trying to get out as the price was crashing. And we've more or less been holding steady ever since then, somewhere, you know, between kind of the high 400Ks and the low 600Ks. We've been holding steady this whole time throughout. And that suggests that there was a pretty kind of stable base of people who are using Ethereum. We're going in, using it for things like DeFi, transacting on the network, which would then be a natural source of demand for ETH, right? You need ETH to transact on Ethereum. You need ETH to use Ethereum. And so that is one kind of native source of demand, right? That if people need ETH to be able to pay for their transaction fees, then there's this kind of constant money flow that's going to be coming into the network as a result, which creates demand, which can help hold the price up. What we've seen more recently, this more recent sell-off, really kind of following the CPI print that we just got, is we've now seen a breakdown in the 7-day moving average of active addresses. We're actually falling down now closer to 400K, to levels that we really haven't seen since late 2020. You have to go all the way back to late 2020 to see the 7-day moving average back at those low levels, suggesting we might be entering now a downtrend in active users, just like we were seeing back in the bear market of 2018. You can see the downtrend back here. Maybe now we're starting to show that again. Arguably, you could say we've been in a downtrend, you know, ever since May of 21, but really since November of 2021, I think you can argue we've been in a downtrend, very much a bear market signature, like some of the other things we're looking at. And potentially now that's accelerating. We've lost maybe the bottom support of the number of addresses kind of actively using Ethereum. And you can see this manifest in other charts as well. So here I'm showing you the average transaction fee for Ethereum in US dollar terms. What you can see is that it really peaked out back in November of 21, you know, being up at, you know, in the kind of $60 range even, you know, pretty expensive to be using it. You know, $60 to $40 just for one transaction on Ethereum. You know, one of the reasons, this is really one of the things that was propelling a lot of those alternate L1s, right? The ones that were, you know, just a couple cents, if not less than a cent to transact on when Ethereum was so expensive. What we've seen is a massive just crash, just falling off a cliff of the dollar term of Ethereum transaction fees. So part of this obviously is that the price of ETH has been falling. So of course, transaction fees will go down as the price of ETH falls. Then probably another part of this as well is that just the amount of people using Ethereum, just the number of transactions, the demand for ETH block space has also been falling off a cliff to some degree as well. And we currently sit, you know, down at around $5 to $6. You know, we're talking about a factor of 10 lower than where we were over here at kind of the height, you know, more than that lower, you know, 10% of the cost back then. And so that's just another sign that ETH is entering a slump in demand. There's just not as much demand for Ethereum. People aren't using it as much. There's not as much demand for ETH block space. So therefore, the transaction fees are lower in conjunction with just the price of ETH falling, which, you know, also would be, one could argue, is a sign of a falling off of demand. And another piece of data we can look at that also shows an amount of demand drop off for ETH is its usage in DeFi, the total value locked in DeFi protocols. And you can see this just falling off an absolute cliff. Now, obviously, you know, part of what this is going to be doing is if you're denominating this in US dollars, you know, the assets that are on ETH being locked up have been falling in their price. So that's obviously going to be taking down the value that's locked on ETH as well. But it's also likely that people have been pulling out funds from these protocols as well. You know, just looking at the 7-day change, some of this will be reflected just in price, but a lot of this, we just go through all these protocols on ETH, is going to be people pulling their funds out. You know, people wanting to get out of DeFi, get out of the crypto space. And that's really what we're seeing right now is just a drop off in demand. Just one more place where we're seeing a drop off demand, that people aren't using DeFi as much, potentially getting out. So again, prices have been falling. All of this is related, right? Prices of crypto falling, people want to get out of crypto as a result, people capitulating out, etc. That leads to less demand, that's less money that's going to be flowing in. It's just typical bear market behavior. That's what we're seeing, a fall off in demand. And really, we haven't seen any signs from these metrics perspective of that reversing right now, that of demand re-entering the space. And so really, what we're at right now is not totally dissimilar from where we were before. We kind of knew we were in a bear market, and this is just continuation of that bear market. So if that's what's going on right now, if this very much is a bear market that ETH is in, we're looking for maybe where the bottom could fall. Let's just talk about that a little bit, flipping over here to the price chart. So first off, we do see that we have lost that support we were holding, at the summer lows, which now makes Ethereum follow the likes of Bitcoin, collapsing down below the levels it held at the bottom of the 21 summer correction back here. And now if ETH is, looking to try to find support back at levels, all the way back at March 21, if it's able to hold that. But let's just think now about where are some possible levels that ETH could fall to. So maybe just some kind of questionable speculation here. Obviously, we don't have there's nothing any way for us to really know where the bottom is, but let's just kind of look. So obviously from the UDPI's perspective, if historical trends continue, we don't see broader sell-offs in broader markets, it very well could be right around where we are right now. So that would be one kind of point. Maybe this kind of general level around 14K, maybe going down closer to 1K, could maybe be that point where we find the bottom. But there's some other levels we can look at as well. So obviously, Ethereum being younger, there aren't really the moving averages like there are for Bitcoin that people look at as being established points where they expect to find bottoms in bear markets. But let's just look at the ones where Bitcoin has found its bottoms during bear markets and just see where those levels are as a comparison. So here's the 200-week moving average, which sits right now at a little under 1.2K, $1,200. So, with Bitcoin, it often found its bear market bottoms at around that level. Maybe that ETH could do the same thing. Now, we don't really have a lot of price history, enough price history with ETH to look at that back through its entire history. It really only starts at the March 2020 crash. But, if it has some significance for Bitcoin, who knows? Maybe it could have some significance for Ethereum. Might be one level just to look at as being interesting. Now, another one that people look at for Bitcoin is the 300-week moving average, which it found its support at the bottom of the March 2020 crash. Ethereum is not old enough yet to have much data on the 300-week moving average. It really only, had been alive for 300 weeks, starting in February of this year. But we can see just, where it is right now is at $900. So that's obviously would be quite a bit lower if we'd had to fall all the way down to there. But that's what it's looking at. Maybe just one potential level to watch. Around $900 would be the 300-week average. Now, another thing that we can do is just take a measured move from, the top of the early 2018 top of that bull cycle, and then look at the bottom of the bear market that followed towards the end of that year. ETH was down 94.5% from the top roundabout, or around 94%, let's call it. So obviously, if we apply that to where we are right now, that would be an absolute bloodbath. Actually, I need to zoom out more to even fit that into this this chart here. So if we went down 94%, that would be around $200 to $300. That'd be around $300, a little bit below that ETH would fall to match this bear market. Now, obviously, with diminishing volatility, we probably don't expect that to happen again, right? I think things would have to get pretty bad in broader markets, and especially the crypto market, for us to see a 95% drawdown in ETH's price again. Much bigger market cap, way more adoption, way more usage, way more things built on top of it, etc., than what existed back here. A lot more of the value now in ETH is on fundamental value than just mere speculation like it was back here. So I would find it very surprising for us to do that. But that could be maybe what you'd look at as being a really extreme case of where you could look for at a really nasty drawdown should we see it from where we are right now. But it's certainly not, of all the levels we were talking about, I think it's the one I would obviously see as being least likely. But just one thing to look at. So, that's kind of where we are right now. It's kind of an unfortunately not a particularly positive outlook right now. ETH is falling off of key support. There's signs of waning demand on its blockchain. Less demand for its just for the block space on the ETH network. And we've also seen that's in a very much a negative momentum bias regime, very deep into the negatives, basically at levels that you only see in the depths of bear markets. And, the UDPI is also saying that, a lot of blood has been spilled already. So, who knows where the bottom's going to be. And again, my thesis with ETH and the rest of the crypto market has been and will remain that crypto will find its bottom when broader equity and risk assets find their bottom. Once we finally find relief, however long that takes for us to happen, find relief from, inflation and then the Fed being hawkish and just everything that's pulling down risk assets as we see it right now. Until we find some relief for those things, I personally don't see much reason to believe that we're going to be exiting this bear market. We might be able to find more or less of a bottoming point where we're just kind of chopped sideways. Maybe we don't have to see as extreme and sharp pain as we've currently been experiencing that whole time. But until those kind of broader factors change, I don't see a whole lot of reason to change our outlook just yet with crypto or to expect some kind of decoupling that will lift us out of it. So just my perspective. Obviously, you should form your own opinion on these data, but that's kind of what I'm looking at for ETH right now. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. Got a lot of updates about our indicators and more over there.